starting video 3 of 3. Today we only are covering 75 charts, but I had the most requests in a long time, but they were all concentrated on the same set of charts. So there are a lot of duplicates, which is great. Overlap, I should say. StarBucks. It allows us to spend some time on the stocks. So this is a catch a falling knife. I like it. For some reason, Wall Street hates it. It's a consistent business. The crank. I mean, who's going to give up their coffee? Nobody. I don't frequent Starbucks. I mean, I'll buy it at the airport, so I'll pay like $65 a cup of coffee. That's okay, but I don't seek it. I feel like I can get away with U-Ban at whatever dollars per can at Costco. I do have, when I want to have a good cup of coffee, believe it or not, the Nespresso is outstanding, and I think it's like $1 a cup if you buy it at home. And I mean, like, you don't even need milk or sugar or anything like that. It's delicious right off the, like, forget Keurig. Nespresso is where it is. Thanks for the gift. You know who you are. $70 is a base. And it was the base for a pretty big rally. It has given up half. So this right here is a target. Now the problem is, what are they doing when they bounce? Like this bounce into 90 and 95. They're going to face some selling. At some point, that selling is going to result with no lower lows. But for now, every dip resulted in a lower low, and that's why they ended up here. So now that it's inside this solid support, I like it. But the market's at our all-time highs. You see my dilemma? So if you get long with buying calls, it's difficult. If you get long with shares, I get it, and half of a position, because you might get another batch at 50. What? Yeah, not on its own. On its own, it's not going to, it shouldn't go to 50. But if the market has a 5% correction, this one will be below 60. It's a good starting point. Don't get me wrong. Selling put spreads, buying debit call spreads for the long term, buying leaps, half positions, I get it. Buying shares, I definitely get it. But half positions, leave room to double as an investment. As a trade, selling puts in the falling stock that's of this quality into prior support works. I don't think it was exciting premiums though. So yeah, I get it. This is support and your next level of support here. So those are two great entries for Starbucks. Any people that bought the dip, good job. Now, if I was long up here and I added here, I don't know if I would have done that. It's not a big enough dip for me. But it's a good company and the stock is on its heels. And you have to ask yourself why. It doesn't matter what we think. It's what Wall Street is doing with it. On the other hand, this company is flying off the shelf. You remember how much trouble we had when we were long at 35 or 34? Yeah, that's why I don't want that stock for me. This here is not a starting point. This is an exit point. Look left. This was an area from which it collapsed. Technically, I see what you're seeing. I can justify 92 and 95 from a cup and handle, inverse head and shoulders, whatever. But I have to be realistic, and I think there are going to be dips in between, and the next dip may take you to 54 or 56. That's the big picture. The P&L is fine. The company business is fine. You have an earnings report in 9 days. We shall see what happens. If I was long tactically, I would be out before the earnings, or at least I would lock my profits. Okay. If I'm an investor, then I should revisit my thesis and decide how I'm going to protect myself. Covered calls, maybe. Shopify, I like the company. I don't like how management talks. That's the honest truth. Look at this P&L. It's pretty crazy these days. So be careful. This is a Kramer fave. I think it will get coverage on CNBC. Be careful. There's a mountain of sellers at 78. And technically at 82, it should be death as far as the stock price. But I don't know what they say. They have a successful business. 69 would bring sellers. If you lose 69, you might end up at 63. So I gave you areas of interest. 78 is physically the heaviest traded line in this whole thing you're seeing. So since December until now, that's the area of interest. Above it, there's hard sellers at 63. You can see them right there. So if the hard sellers are at 63, taking that out could get you there. But I don't think it's easier said than done. So this is a volume area. That's resistance. Okay. And support must hold 69. And if not, then your other must hold level is gone, and then you end up in the 60s down here. This target was hit. So zooming out, they're buying dips inside of an ascending channel. I think they may dip to 63 before they go. I don't like leaving this area down here, areas of interest. So going into earnings, it's a very big coin flip. Silver. Why is it not silver following gold into all-time highs? Why? Right? So I think there are a couple countries accumulating gold for political reasons. They might be ready to pivot off the dollar. Scary conversation for the world. And look at this. This is a prior behavior that I've copied and pasted several times. I forgot where. There we go, right here. And then repeated right here. And you can probably be repeating it right here. So buy the dip in silver is what I'm saying into 22 to curl it back up. Target 2 is 22.2. So like 22.5 or lower. Correct. Correct. This silver thing is scary. I think it falls a little bit lower. Just like I'm not bullish on gold from here, from an investment, tactically I can see trading it up and down. So be careful with silver. Here's SMCI. It looked like the end of the world the way it reacted to earnings, right? Yeah. And the message was amazing. Pretty big growth. And they didn't disappoint on anything except Wall Street had something in its mind. And we kind of saw things that could say, all right, this is the mode that we're in, selling rallies. And we're making lower lows and lower highs. So for SMCI, I have an alert. If it loses 655-ish area right there, I think it goes to 425 in a series of lower lows and lower highs. In other words, this channel is persisting if they don't take it out. So they need to get out of the blue box. How the hell are they going to do that if this earnings report didn't get it done? I mean, this is going to need a tailwind from NVIDIA like nobody else. So the message from NVIDIA, moon message. SMCI says, we done. That's it. We've seen the best. I don't know how to resolve that from a concept of this AI concept. So be careful being long, be careful being short. Tactical. We go back to that tactical word. This is the perfect picture of tactical. Get out of the box for the all-time highs, or get ready for more downside in a series of lower lows and lower highs. Okay, so there's a path to 300 in the stock. Stock, not company. How? I don't know what the macro picture will have to be in order for that to happen, but lower lows and lower highs does not have to stop until it hits 400 or lower. From a charts perspective, possible, it is there. You trigger this one, you will get here. But I wouldn't hold a put for that. I'm cautioning people from doubling down. Like if I got in at 1150, I'm not adding here. I may have the chance to add much lower, which brings me back to a pretty good reasonable point. Let's say I bought 100 shares and I got stuck up here. I'm not adding here. This is not deep enough for me because of the possible downside. So let me rephrase. If I bought 100 of 300 shares to begin with, like I really honestly did not buy a full lot, and I have room to double it and then add some more. I could have added some more here, 30% down, but I would leave room to add down here because I want my blended price to be somewhere down here. Anyway, I don't think it's an advantage to be long at these levels versus these levels is what I'm saying. Like if you double down and you're all in inside of here and then your blended price is in the middle, I don't think that's an advantage over being at a blended price up here. You understand what I'm saying? Okay. This is just risk management, nothing to do with charts or anything. I'm not telling you you shouldn't be long the company. I'm just telling you mathematically, if you want the best entry price, this is not where I would add with SMCI. Okay, snowflakes. I believe we went long on the dip. I can't remember. Anyway, earnings in about 2 weeks, sorry. I will not be long this after the earnings. Oh, I remember. We went long and it got under fire, and this rally gave us relief. You should revisit that trade. I'm in it. Mine is not that big, but if it were big, I would cut it in half. It's working, and if I didn't need to cut it in half, I would not have lost money. I would not have made a lot of money, but it was a bad situation, and I got away with a small win. Perfect. However, if we make a curl before the earnings, pre-announce, or somebody downgrades it before the earnings, and we get stuck, then I have half a problem to deal with. You understand what I'm saying? Yes. So yay, so far it's working, but don't get married to it, and please manage your risk responsibly. SOFI. This is one of those perfect stocks that nobody approaches me when it's actually a bargain. Like on dips, not a lot of people come. But up here, everybody asking me about SOFI. We need, as a collective, to develop the instinct to start looking at things when people hate them. So do I love SOFI? I don't love it, but I think it's a good business. I really think it's a good business. And now it's trying to hold support at 650. It's a place to consider longs, especially if I'm selling puts to own shares. This is a low dollar stock, so a lot of people can sell puts to own shares. What do you mean? Instead of buying shares, 100 shares at 7, I can get paid some money to buy it at 6 or 650. Why wouldn't I do that? Okay, so there's no upside from that except for the money I collect up front, but I could use those funds to buy a call or a call spread to participate with upside. So there are ways to get long a stock this low in dollars without having to put a lot of money out of pocket. Anyway, we can discuss it. Look at the giant earnings reaction, and it's above us. So it's going to take a lot to recover that. And the markets are at all-time highs. So what am I saying? If I am long from here at 750 or 8, I'm not adding now. Why not? If we rally, I'm already long and I'm not hurt. If we fall, I would have wasted a bullet. So why not add when it loses 60? It can lose 6. It can go to 540, 550, 560, but that is in the same circumstances of Johnson & Johnson thing, where something happens in the world and we have another dip of 5%. So I wouldn't add in SOFI. It's not a bad place to start. Just leave room to double down. And not until it loses another 25% probably. Okay, Square. I do like Square. I am a client. I don't like how they do business with me. There's no way I can get help from anyone there. But they do offer a good proposition. So from that perspective, they just reported, they fell and they rallied, and they're now back at the neckline. So I invite you to look left. This is an area of consolidation. Anything above it has been a problem. So now with this reaction having spiked to 78, that wall has gotten bigger. So I would confidently say that this whole area is resistance. And you can say that all over the map. And below, you have a very good, strong area of support down here. So you're stuck. You do have a good proposition of support and a good proposition of resistance. So what now? You hold the stock if you own it. If you want to get long, you get long partially. You leave room to add lower, and or you sell puts to get assigned. Let me show you these levels on a higher time frame. Aren't they here? We just made them global. There they are. So here's the danger. Technically, if you lose this candle, which is 66, you could get to 56. Technically. But there's a lot of support down there. So I wouldn't hold puts for that. I wouldn't buy calls either. So I'm a range trade here. Iron condors, sold puts to own shares, or credit put spread if you just want to be long, and a debit call spread over time. Nothing, but nothing directional for me. SQQQ. So I don't know what you asked me about this one. Hopefully not to accumulate. This stock is going to zero. In fact, it split so many times that the all-time high is like 5 million or whatever it is, 500,000. This is, you trade this when you know something is happening within the next couple of days. So if you know we're going to be a bad week, you use this to short the market, or vice versa. You buy puts and calls opposite to where you think the market's going to go, or you buy shares. I would not accumulate this. I've known people to say, oh, we're going to have a crash, I'm going to keep buying it. You're going to lose all your money. You just saw. I just showed you what happens over time. Crashes or no crashes. We've had many crashes in between those. And look at it going to zero again and again. This is Wall Street's way of taking your money. If you want to trade the QQQ, I would much rather trade the QQQ. Forget about the SQQQ. There are a lot of experts that love it, but they don't hold it. They get in and out where they think they're going to have a timing thing. So this chart is bullish if they hold 10.5. If you hold 10.5, this one could pop 6. So the market would react 3 because it's a leverage. Is it a triple or a double? If it's a triple, then the market will react 2. If it's a double, the market react 3. So SQQQ pop means the QQQ is falling. So we may have a dip in the Qs. But I also said that this could fall another 6%. So we're going back to watching the QQQ video tonight. TMDX, I would not be long the stock unless they take out 132. So if I was trading the stock, this would be my exit spot. Oh my gosh, what are you asking me when you come to me with this one? Let me answer you. If you're asking me to short it, I wouldn't. What are you shorting? Okay, P&L is good. If you have something specific in there saying, oh, they're cheating or something, okay. But the chart, what are you shorting? There's no, yeah, I wouldn't be long, but I don't have a reference point to short it. If you're asking me to say, hey, is this a good time to get long? Hell no. It's never a good time to chase a stock that just did this. Unless you're a momentum trader, and you should be down in the 5-minute charts, and you probably don't need to ask me. Or pop into the live room. We can trade it minute to minute. Okay. All right. Let's do that. Tesla. Okay. That is the funniest thing Tesla ever. I kid you not. So for months, weeks for sure, I've been saying Tesla will get to 140 in a series of lower lows and lower highs. I've been saying, actually, the way I worded it, I wouldn't hold calls for the last few weeks, months. I wouldn't hold calls if it doesn't recover, and I had numbers. And those numbers were first 212 to 220, then 208 to 212, and then 190 something to 212. And it kept lowering because it's a moving target, right? We got to 140. Not many people considered it long. And now I'm getting all kinds of requests. Can I go long Tesla now? Well, my question is, why aren't you long Tesla at a place where we said it was a target for weeks and weeks? And the minute it hits that target is when everybody should have said, okay, let's go long. Well, I don't want to trade Tesla, so I didn't go long. But up here, there's no way on planet Earth I'm going long up here. The report from Tesla was bad. I said, let's buy calls into the report on the night of the report if you were in the live room. Why? Because of expectations. I knew that the world was expecting a disaster. Why? Because the media told us, hey, it's going to suck. Well, guess what? If you tell me that, I'm going to take the opposite because you hammered that point home to everybody now believes the same thing. Not many people expected an upside. This pop on earnings was a relief rally. The first one, the one down here. Thank God it didn't suck too badly. It was bad, but it wasn't like super extra sucky bad. And then this here was a headline. The morning of that was a comedy. In the live room, somebody said, Tesla headline. I was like, okay, what is it? I got 4 people tell me what the headline is, and they were 4 different headlines. So these 2 days are perfect examples of how the media causes us to lose money on purpose. They led us down the path because it suited their rhetoric, their narrative, to make money off of shocking things from Tesla. and then they led us up the wrong path because it's shocking, and it's real or not, I have no idea. I mean, the headlines were ridiculous. That's why if you didn't pay attention to the headlines, look at that, 198. Anybody that went long into 198 may end up making money, but only by pure luck. Okay, so I would have sold call spreads here. Okay, I would have sold put spreads here. I'm not trading the stock because I don't want to argue with stupid. And there is support below now. Anything below 168 is now support zone, and it extends all the way down to 148, unfortunately. And anything above from here on to 198, where it just failed, is a lot of resistance. The bulls need to take out 200 with force to get to 228. I would be shocked if they did that, but they need to. So the only way they would do that, I said Elon needs a new headline, and the headline is not anything about the same car. It's about a new source of income. So maybe one of these headlines that popped it here is actually end up being a new source of income. I don't know. So Elon, the company, needs to come out and start talking about it. Otherwise, I think this was an exit opportunity. So if I was long Tesla stuck from 200, I would have been out so fast, it's not even funny. From a trading perspective, if you believe in Tesla for the long term, like the girl from RK, the money manager, she's been spot on Tesla. Follow her opinion. I don't know where Tesla wants to go. I thought they had roof tiles. I haven't seen any of that. The battery wall, I'm in the market. I haven't seen one stitch of advertising to me or anything. I ended up with solar from Sunrun. So anyway, trading Tesla, not an entry point. Investing in Tesla, completely different conversation. TTD. Looks like I wouldn't short it because if they clear where they're at, they may retest 94, and if they go above 94, they go to 106. So be careful. Unfortunately, there's an earnings report in 3 days, so maybe they do it in 1 day, maybe they don't. And if they dip back to 72 or lower, that's an entry point. So I would stay out until they react to the earnings and then trade the reaction. If it dips, I'll catch the falling knife. And if it rips, I missed it, oh well. I'm not going to gamble with a 50-50 shot going into the earnings. That's the difference. I'm okay seeing it rallying. Some people are not, to the point to where they would go to Vegas basically and put their money on black or red. That's the equivalent. The overnight reaction on your money into the TTD for the earnings are complete binary. You go in, just roll the dice. USO, I am no longer short. Man, was that a good short. Now it has support spread through 72. So they're going to bounce. If they are, they're going to come up to 79 and then hit a wall of resistance. If you're asking me if it's time to book your profits, heck yes, I booked my profits earlier. Valero, I would not want to be long any oil companies. Oil is extremely high only because Goldman Sachs goosed it up to high heaven. And then headlines of war in the Middle East, blah, 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 blah. Well, the war in the Middle East continues and the price continues to fall, which is the overreaction of headline, the way they dress it up on the oil. We do not have a shortage of oil. Let me dramatize it for you to get that point across. If the U.S. gets cut off from everybody in the world on oil, we can flood the world with oil. That's how much oil we have. So when it comes down to it, we will pump if we need to. So we don't have this shortage of oil from the Middle East. This is not the 70s. So put that aside to trade oil stocks and like stocks rather than the commodity itself. And their income is tied very closely to the price of the commodity. So that makes them unpredictable. All of them are great companies. My favorite are Exxon, Chevron. And this would not be the one I would invest in. But if you know Valero inside and out, that is also you're right, because I don't know it. I don't have time. I just pick the top two and go with that. Having lost 163 or 164 means that we're coming to 148 or 146. It wouldn't surprise me to get there. If you can see, the problem is at 17. Actually, the problem is this candle right there. Whatever happened, the earnings report. the last earnings report. If you put a box around it, you kind of get an idea as to the limitations it has on rallies. Anything inside that box is going to find a lot of sellers. And there's no earnings report for a while, so it's going to have to go on its own goodness. In theory, the loss of this one should have $16 of downside, so I would look for a target around 150 or lower. If I'm long via shares for an investment, I would not be adding here. Some of the stuff I'm saying is going to piss people off, like my views on oil and pumping and not pumping. Don't make it political. I'm giving you the truth on the math of it. If the U.S. is cut off from oil, it will pump its own oil. We're not going to not heat our homes and power our machines just because we don't want to have the green movement, afraid of the green movement. So it's life and death at that point. All right, VRNT. This P&L is not very good. Maybe it's getting better on a quarterly, but on a yearly basis, it's not that great. So find out what it is. Providing actionable intelligence. Okay, so I don't know what that is. Sounds like an AI service for companies. I'm not a fan of this chart at all. Something's weird about it. You have a huge seller above 34. So anything above 33, I would not touch it. I can tell you it's easier to get to 25, 24, 23, and 22 than it is to break out of 37. You have a month before the next earnings. Vertiv, a couple people have asked me, see, this P&L is a little bit better. It's constructive. Maybe the last quarter wasn't so good. This stock is what I call THTH. It's too high to chase and too hot to short. I don't understand the company. I'm not going to be chasing it up there. So let me ask you this. If you absolutely think it's going to be fantastic in the future, why isn't it showing signs of it now? And if so, why would you load up here when it's never been higher? If I waited this whole time, oh my gosh, golly. If I waited this whole time, now I want to load up. Okay, I'm interested to see the metrics on this one. 5 times sales. Interesting. Okay, so I don't understand how this is going on, but it is what it is. No, why would you want that, James? What do you know that we don't? This is THTH. It's too high to chase and too hot to short, and it's not liquid. I guarantee you this one is not liquid as far as options are concerned. Yeah, so leave it alone. It's it's escargot. Yeah, you can eat it if you butter it up and everything, but why would you? So if you want to short it, maybe a put spread, a wide debit put spread. There are better choices, absolutely. W, okay, Wayfarer. I have a feeling that this report was not that great, but there it is. Probably all about expectations. I say this without having read the report, in all fairness. Technically speaking, if I'm not long and I just chased it up 40%, whatever that is, 25, 26%, I don't know what I'm doing because I'm going into all of this. Everybody here, everybody that bought it up at these levels for a while has been losing their butts. And here I am thinking I'm going to be smarter this time. No. What they're doing is they're ping-ponging inside a very wide range. You have sellers above and buyers below. I think if you draw a box around this, you should have your playground for this stock. If you get long at the upper ends of that playground, you're putting yourself in danger. And if you want an opportunity to trade, go in the long lower third. Upper thirds and lower thirds are no man's land. So turnaround points. Now, once you have an area that's this defined, once you leave it, you go in that direction a lot more than people think. And most often it's easier on the downside. So I'm a fan of their marketing. They're aggressive marketers. Like a few times I land on their website by mistake. So I know they're good. So I almost bought something there once too. Anyway, that's your trade. You do have upside, then you have sellers at 90, or hard sellers at 90. Workday. Tried to buy the dip, I think. Did we? I don't remember. Drawing a blank. This area is pivotal. So the rally a few months ago in November was too big. And this is just coming back to check back from where they jumped. So it's a starting point. Could be. I think it could extend down to 220. Let's say the market has a hiccup in the next couple of weeks. I can see that it's possible for this guy to get to 220. I wouldn't hold a put for that. I know they're selling rallies. I know that 268 to 276 should be hideously tough. I know that they triggered a head and shoulders that has a target of $46 from up there. So there we go, that 220 again. So I'm going to tell you this. We're going to draw another box. But these boxes, come on, Nick. This is an immediate box. It's going to take a lot to get out of 264. So this is the final statement. It's going to take a lot to get out of 264. And if you do, your exit is at 280, 281. It's not that hard to lose 241 or 240, but if you do, you're going to come down 20 bucks. All right, Wells. Banks, again, love them. No, I don't love them. This one, I would be out. This one is vulnerable for a disaster. Now, I haven't looked at Wells in a while. Sheesh. Okay, so that's a weekly chart. And you're going to get all these people looking at this inverse head and shoulders, and they're going to say, I'm going to be long Wells. Yeah, you're right. You have $37 of upside. So we'd be pushing 100. Yeah, that's the spirit of it. But also, the spirit of it is you should wait for the breakout. And that means Wells should go to 70, drop back to 60, and then come back and take out 70 to go there. So where's the fire getting long now? Once you let them show you, they can do it. So crossing a line is not a breakout. Closing above it, coming back below it, coming back above where you fell back from is a confirmation of the breakout, if you want to be honest. So the way to do it is you let them break out, and on the next dip, you buy it. You buy the same calls for just as cheap. So anyway, this is a bull trap potential in Wells for people starting Wells longs right here. And if you're shorting Wells, like I'm shorting, like I shorted JP, that's fine. In fact, I'm going to add it to my personal hate list. No, my personal checkout list. What happened here? Is that their earnings report? A couple of days later, boom, boom, boom. I don't understand. Maybe banks did that too. Oh, this here is not a good starting point. How about that? We finish it with that. You're vulnerable. XLP is that staples sector. So this sector could not catch any respect. That's like Pepsi and such, right? And I was like, the market is falling out of bed. Don't you think that this is the sector that gets bought as opposed to the discretionary? The consumer discretionary was flying off the shelf and this was falling. And then apparently everybody woke up. So why do these set of stable companies trade like they are Tesla? Why is that? These are supposed to be stable companies, stable. Look at how violent this thing is. Okay, so let's use that. We rally and we drop and we drop and we rally and we rally and we drop. So we have a range. And the range is the upper ends are 78 and the lower ends are 66. Both are extreme. You have a backup for 81. So going into 78 to 81 is not a good starting point. Again, here this is going to say, oh, inverse head and shoulders, and the upside is 85, 6 if they break out of here. But you have all of these to deal with. So it's not like this stock can spike 10% in one day, because it can't. It's a basket of stocks. There's no headline. Oh, XLP announced new pricing. Boom. No, you can't. It's a bunch of stocks. So you're going to rally fast, but not gap up. So where's the fire? Get long on a dip to 73. That's what I can say. That's from the daily. Okay. Let's zoom in and see if we can get information. Okay, there you go. 76.50, 76.60. You see those? Whoops. Did not mean to do that. Right here. Okay, so these are tails. What does that mean? It means there are two sellers for 2 hours. Let's get lower. Those are the same tails. Now you have support down here. Those are also tails. But I'm trying to stop people from buying calls is what I'm trying, blindly. I want them to know what they're doing. Okay, no new comments. Exxon. So I shorted Exxon, and it was a bear to short. But the last day of my short was when it peaked, and that was the end of it. Last couple of days. So I was right about it, and I wasn't perfect with my timing. I got away with it because if somebody was managing it, they had an exit that same day and the day before for no damage, and they should have taken it. I sent out notes. Nevertheless, I don't think I want to be long Exxon from an investment perspective up here, because it's not Meta on the upside potential. It's an excellent company, but up here for fixed income, I would rather lend the government money for 30 days and get more than what these guys pay. So that's the inversion of the yield curve without the risk of downside. Let's say I buy the stock for the dividend, and then the stock falls, market corrects, and the stock falls 10, 13%. There goes my dividend and then some. So not an obvious entry point. This could be here, where it peaked, it dropped, it popped, and then it dropped some more. It peaked, it dropped, it popped, and it's dropping. I think they're selling rallies. So I think if it comes back to 120 and I'm long, I'm out. I don't know how much upside it has above 125. The markets are at all-time highs. Oil was at its all-time high rhetoric. War in the Middle East. What else do you need in order to pop in this business? See what I mean? So it's easier to drift lower. This right here is like nothing I've ever seen. You cannot explain this in a stock like Exxon. This stint right here was just shocking. I mean, look left, you won't find another one like it. You'll find leaps and bounds, but you will not find these tiny bit of candles that are consistent from here to here. Look left, you have these. These are not the same. These are not the same. There aren't any stints like this one. I have never seen anything like that. You see it? Maybe, not even. Maybe this, maybe. But that's rare. That stuff is rare. Anyway, just question mark. XOP, look at that, same thing. So same comments on XOP, same comments. Here, so for me, when a stock, let's see how can we do this without confusing people. Pop, drop, lower low, right? Pop, drop, lower low. So when you pop and you make a lower high and a lower low, now you have an area of resistance. Same with Exxon. I could have done the same thing. You also have the beginning, the formation, the potential, you heard the words, of a descending channel. How steep that channel, I don't know. Okay, it could be consolidation before making a new high. I acknowledge that. And then I offered you the logic of oil at all-time highs, war in the Middle East, the rhetoric of oil at all-time highs. Goldman Sachs saying it's going to 100, and we're making lower lows and lower highs. So how about I say it this way? If we fall below 146 before we get out of 158, same comment on Exxon, I'll give you the numbers in a bit, then we are making lower lows and lower highs. Follow the channel until it hits a significant support, which is no sooner than 141. On Exxon is the same thing. Actually, it's similar. So it just made a lower low. So, okay. YM. So this is the comment on the futures contract for the Dow. I'm not sure what time frame you want, but if you're trading YM, like I said about the other futures contract question earlier on gold, you should be in the live room. I can help you. On this time frame, on the 2 hour, it's a bearish setup. On the weekly, it's most definitely a bearish setup for a lot more downside, like 8 to 12%. But I wouldn't short it based on that, because you can't hold the futures position for weeks. You shouldn't, actually. ZB, same thing. This is the long bond price. So think TLT-ish. Same comments. So we need to discuss it. ZB is broken, but should rally because I'm long the TLT. All right, ZG. So this is Zillow. It has two tickers. Z and ZG are the same company. I don't know why they do that. A couple of Under Armour is the same thing. All right, so we have a swing, highs and lows, and we're in the lows inside of a support area. I am scared at the P&L. Look at this freaking P&L. This is horrific year over year, but maybe they stabilize quarter over quarter. I'm pretty sure they'll find ways to make money off of the real estate market. Ascending channel on a daily basis, so no earnings soon. I mean, if you bought the dip here, that's fine. You're long inside of a support zone. I don't know what happens if we lose 33. And I know there's a lot of sellers above, so make sure you're realistic with how much upside there is from it. Zscaler, now this guy has a lot of upside potential and downside potential at all times. We go long it. I wouldn't be long it here. Well, let me say it differently. If you're long for the breach of 180, okay, I get it. If you're tactically. If I'm long already, I don't add here. Because right now it has a lot of sellers at 193 and a lot of buyers at 168. If you lose 168, I think you can be in the 150s, 148s. But it's easier to bust out of 180, the highs from last week, which would bring you to 190. So I'm giving you your ammo. It's closer to a potential trigger to get you to this zone than it is losing this one to get to this zone. You see what I mean? It's a fast moving stock. If you don't know your charts, invest in it, and this is not a place I would load up. I could nibble, but I wouldn't load up. All right, with that, we end the session. Woo! The XLE, Let's check on the XLE 1 minute. You like it for a trade? Yeah. Are you buying calls? Maybe I'll sell them to you. Which calls are you buying? Maybe at 88, I would be considering the XLE. Why? This is Chevron Exxon. What do you like about it? Well, we will find out this weekend. Didn't Warren Buffett have his meeting? And a lot of news comes out regarding his company of choice. I forget which one it is now. Okay, stopping the recording.